All right, folks, here we are on Trading Nut. We've got Steve Young in the house. Now, Steve was the winner of the inaugural Trading Nut Funded Cup, sponsored by these guys, City Traders Imperium. Now, he's going to actually break down the strategy that he used to grow his account from $50,000 to like $94,000 or $97,000 in the 45 days of the Trading Nut Funded Cup. So, Steve, let's share your screen and have a look at things.
Yeah, I'm Steve Young. I'm just going to show you a few things of what I'm looking for on the daily in the 1 minute to try to get a daily swing trade based off a 1 minute entry and 1 minute stop loss.
And guys, I should mention, we did shoot a podcast. Go and check it out. There's a link under the video. So you're going to get Steve's full story, his full journey, how his trading is now, how he got there. It's an amazing story, and I'm sure a lot of you are going to resonate with that. So Steve, let's share your screen and have a look. As you'll know, as a trader, one of the biggest issues can be coming up with enough capital to make it worthwhile. Well, the good news is my sponsors, City Traders Imperium, have solved this problem for you. Their day trading and swing trading funding programs mean you can trade between $10,000 and $4 million in capital with up to 100% profit share. Yes, you get everything you make on the account. Plus, the folks at CTI have made it super stress-free, allowing you up to 6 months to pass the funding challenge, which means if life gets in the way, you can park things for a while and stick to your trading plan. To check them out, click the link in the description below or in the card above.
So this is NASDAQ 100 on the daily on the bottom, and it's the 1 minute on the top. All right, so what you see is obviously a strong downtrend, but if you draw some trend lines, if you draw some support levels based on daily, if you go back here, let's see, where are we? We're on a pretty strong area. You see there's a lot of action over here to the left. So you know there was a lot of volume traded there, so that tends to be support and resistance. Just doing the basics. So we have a strong support area with a lot of volume traded over there. We have a downtrend, but if I put up the drawings for a second, you'll see I drew a trend line. You see this trend line right here that's coming up and to the right on the screen at the bottom. I'll zoom in a little bit so you can see it better. This trend line is drawn on the monthly chart. So this goes back, and I'll pull up the monthly chart so you can see. I just want to get details so you can see why I would take 70 losses trying to get into one trade, because I just think it's such an important area. So this is the monthly. So this is the trend line on the monthly. It's going from the previous highs of NASDAQ 100 all the way to the pre-pandemic high right here. And then you can see, if you look closely, you can see how it touches even wicks on monthlies, and it just hits so many points along that line, So it's showing me that other people are seeing that trend line and they've traded off it before if it keeps lining up. So now we're at that trend line. And this goes back, 3 years? So it's a pretty strong line if it is, in fact, a point of interest. And also you see this purple EMA, that's a 50-period EMA. So right now we're on the NASDAQ 100 on a 1 month time frame on the 50-period EMA for the first time since the low of the pandemic. First time. Okay, so that's two things. Boom, that's two strong areas of interest. So I'll drop down now to the weekly. All right, so we're on the weekly, and we're on the weekly 200. All right, so we're on the weekly 200. It's another strong point, because some people look at different time frames. So some people are seeing the monthly 50, some people are seeing the weekly 200, again, for the first time since the pandemic low. You have all this area over here I showed you about just a second ago, okay? And we're actually, if you look at it, right on the closes. Today, at the end of the day, it was bearish for the last few days, and it was bearish throughout the day, but I thought I saw a reversal pattern, and that's up here at the top in 1 minute. And if you see where it closed right above all these closes over here to the left of the screen. So that means that strong support held, in my opinion. Okay, so drop down from the weekly, go back down to the daily, see all those levels. All right, so we're on the daily, and I'm gonna get rid of these lines in a second here. I just want to show one more area of interest as far as the drawings go. So this is a trend line off the previous highs of the first downtrend that started right after January. So boom, 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 it hits a couple spots. And then we bounced right off that trend line a few weeks ago, or in May. Okay, so we bounced off, it held here once, then it held here again. And you see it touches sometimes right on the trend line. All right, I'm gonna make it a little bit bigger, maybe be easier to see. Okay. You see the touch on the trend line. You see a close on the trend line. You see touches to the left right here in the center on the trend line. So it held that trend line. So I'm thinking that people bought it and now it's holding up. And now this other monthly trend line is holding up. And if I go, let's see, right now I'm gonna go to the Qs real, I can skip the Qs. What I'm gonna do is go to US 30 because that same trend line that's on the previous downtrend, if I draw a trend line here, I have them already drawn up, but on a different monitor. So it's on a different trading view chart. So it didn't show up on this. Look at this trend line, okay? From the top in January down through the tops, it kind of doesn't hit that high exactly, but it gets right in the middle of one of the day's highs. Right here, boom. You got a touch right here. It's going with the trend, but it's not perfect. Okay, but then you have a perfect touch right here. You have a perfect touch right here. This is US 30, but obviously they move together. So touch right here, boom. You got it, just went past that trend line a little bit, boom. And then you have a perfect touch yesterday, which for me was like a few hours ago, where I just took 70 losses because of stuff like this, because of what I just showed you, because it's exactly on this trend line that is held before and it touched it just perfectly. If you look down at the screen, you got the RSI right on the 30. And on some of the indices, not really this one, you don't really see divergence. You see sometimes what's called exaggerated divergence, which is different than just bullish or bearish divergence. It can be bullish or bearish, but exaggerated divergence is when you have a big move on the price, but you have a small move. It's not divergence really, but it like regular divergence is what you think of, because regular divergence will be this RSI will be higher than this last RSI touch. But what you have is exaggerated divergence, which means price went down a lot and the RSI didn't go down barely at all. So it's almost divergence, but I believe they call it exaggerated divergence. All right, so you have a touch on the trend line. You have an RSI on the 30, which is obviously, if you look back on the 30, boom, boom. And these were strong bear sales, strong flushes. Stop right on the 30, right on the 30, right on the 30. The whole, just go all the way back, right on the 30. Now that alone is not enough, but when you put that together with this trend line going down, put that together with the NASDAQ 100 trend line, the strong monthly support going back all the way to 2020 or 2021, look at how strong that is right there. All right. And I'm just going in detail because I took a lot of losses going after this trade on the 1 minute. I'm just showing you why, because it's a very important area. We'll see if it holds. All right. And then I want to show you one last thing on the daily, and then I'm going to show you the 1 minute where I got in. All right. So we're just going to go to one last thing. And some people might think it's just a little bit weird. Like, I'm trading the indices. Why am I showing you Amazon? Or other people are saying, well, that makes perfect sense because Amazon basically is the indices. You put charts, lay them over each other, they're exactly the same. So they influence each other. The reason I'm pulling up Amazon is because it's on a very, very strong level right now. It's on, if you pull up a chart that goes back like 2 years, it's basically at the strongest support you see anywhere on the whole chart. So if you go to Amazon, put it on. First, we'll drop it down. I always start the highest time frame, the monthly. I even go up to like 6 months sometimes. And if you do that, I can show you something about that. That's pretty cool. But okay, look, Amazon, look at the chart on Amazon. Look at this. I mean, if this isn't a strong support, I have no idea what is. What is a strong support? Okay, so that's Amazon. And like I said, they all move with each other, especially the FANGs, Facebook, Amazon, Netflix, Google, they move one for one, basically in correlation. Look at that. Bounce right on it today, actually. Hit it again for the second time today. That's the weekly. Also, Amazon has actually real positive divergence, not just exaggerated divergence. It has bullish positive divergence. You see a higher low on Amazon, but the RSI stops here. And then we have a lower, slightly lower, not much lower, but a slightly lower price on Amazon, but the RSI is above where it was back there. So you see actual positive, and that's on the weekly chart. So a lot of big institutions use like the higher time frame. So they're seeing this, and that's who's buying these things up when the RSI gets this low. And they probably use divergence too. So drop it down to the daily, see what that looks like. Just a little quick thing. Al Brooks and other people probably talk about this, but when you see, well, first of all, look at this. It gets even stronger on the daily, the divergence. I call that jump up divergence because it's not actually like positive bullish. Like over here, you see actual real positive bullish because this was an actual lower low. This is more like a double bottom, but it jumps up in RSI. So I call that jump up divergence. And if you look on the daily candles, this stock closed bearish, right? But the next day went bullish. I call that a same color rejection. When price is going down bullish, but the next day it gaps. I mean, going down bearish, but the next day it gaps up bullish. So something must be going on there, right? If the price gaps down here on this green candle to the left right here, May 12th, the price gapped down. That's what it's saying. And then it went bullish. So what is that telling you? That's telling somebody as soon as it goes down there, it'll gap down. People like, I'm not scared of the gap. I'm buying it. They buy it up, finish bullish. Same here. It goes down, they're buying it up and finish bullish. Same here. It gaps down, it spends 2 days down, but then the next day it gaps up bullish. So, I mean, you'll see reversal bars that are gaps. All right. And then what's that telling you is that people are buying that up there, even though it looks bearish at first, people are buying it up. So it's that combined with the monthly support, like I said, stronger support on the whole chart. I mean, unless it gets above here and that turns into support. You have the weekly and monthly EMAs on the indices. And then now, so I'll just show you the entry, but that's pretty much my thinking on why I got in, why I'm attacking it for. And look, I'm not talking about like a 2-3 week long swing trade. I'm talking about I have to close my position on the funded account by Friday. So if I get a nice rally for 2 days off a 1 minute entry, that's still, you're talking about, I mean, I probably shouldn't tell you this because you're going to tell me to close the trade. But I'm up like 3,000, 4,000 right now on the 1 minute entry I got in. But that's with NAS100, US 30, and Australian dollar. You know, your people out there. I'm trading the Aussie.
And what was what kind of drawdown did you go through to get the 70 losses, and versus your 3,000 profit? Was it $10 a trade? Was it or
drawdown? Well, that's the thing. If you're talking about equity drawdown, not much because I started the day with 102,000 and change as far as the equity. Because I was in trades, so I was in trades. I was up like 6,000 or 7,000, and then they all got stopped out at break even yesterday. You know, when I woke up, I saw it was to zero. So I was going on a swing trade on the indices and GJ, and then so
this is on your CTI funded account, yeah. This is on your CTI funded account.
Yeah. But I was already in profit. Yeah, but I've been in profit the whole time, you know. So. Yeah. So it's not like I'm going to drawdown overall, but so I started the day, you know, fresh, no open trades. They all got closed out, break even, and the balance was at 102 and change. And the lowest my equity got was like 101 or something. But that's because one of the trades worked out right away. The Australian dollar, US dollar worked out. I got in at the low of the day with like a 3 pip stop or something, and now it went pretty bullish. So that's the thing that kept my equity up. So I only was down like 1,000 in equity, but my balance went down like $4,000 or something. So that's about, I use about $60 risk per trade, call it 50, 60. So you're talking about what? Like, probably 70 times, 70 hours. Yeah, I could. That's
70 times 50.
But yeah, I was down $4,000.
Okay, right. And that was on their $100,000 funded account, yeah?
Down about 4,000 on it.
Okay.
Yeah, so it took, as far as the balance goes, so my balance went down $4,000 from 102 to 98.
Right.
But the equity, because of the Australian dollar trade that was working out, never went below like 101, 100, 1,800 or 101.
Okay, yeah. Cool. Right, let's get back to this. So how did you get in on this 1 minute chart?
Right here, 1 minute chart. I'll pull that up. So I'm just starting the day. I'll show you where the day started. The day started right here because the day starts for me when the market opens. So where you can see my cursor, that's 8:30. That's stock market open. You can see how the volatility picks up around that time. So this happened overnight, and I was in a long overnight, and it had a big drop overnight. If I moved back a little bit more, I was I was probably up like 8,000 when it was up here on all the trades. But that started going down last night, and I don't trade during the night or evening because I spend time with my family. So I'll take the loss because I'd rather be there for my family than make money. So up there, that's at 8 p.m. That's at the high. Then it started going down all night. But you can see it's like very controlled sell-off. I mean, it's pretty strong, honestly. It's very strong. But then here, so you get closer to, and then you get to, and this is that trend line I was telling you about off the monthly, I believe. You see how it stopped? This is a trend line I drew that goes back 3 years, and it stopped there. I'm sure you see that all the time, but yeah, trend lines can be amazing. Okay, so right here, the market opens at 8:30. It goes down. And see, what I'm not seeing is a lot of continued pressure on the sales. I'm seeing red then a green, red then a green, bull then a bear, bull then a bear. When the market is really moving down, you'll see like 5, 6 1-minute candles be all red, all momentum right in a row. This, you're not seeing this. This is, to me, this is chop. This isn't directional. This is chop. This is range day. It's not moving. If anything, it's basing. If you see this, it stops here, creates a higher high here. That's not enough to say it's a trade, but I was taking trades during that whole thing because I didn't, sometimes I don't know till after. But you see signs. You see signs of bullishness. You see the big 1-minute candles, they're engulfing. You see no lower wicks or any wicks at all on some of them. Let me make the candles a little bit bigger. Okay. To me, this is a basing. This is finding support. This is accumulation. You see, it's hard to say it without actually watching it, but you'll see every now and then something like this. This huge candle, but then it gets sold right into, and huge candle gets sold right into. Sometimes that could be a liquidity grab or a trap, but when you see it all day and then you get down to an area, and this is important. This is really important. Right here. Here, and then look at what it does before and after that. Before it bases, it flushes, might be a stop hump, might be a liquidity grab, or it might just be a demand area. It bases, then it drops, then it flies up. When you're watching this live, this is strong momentum right here. Boom, boom, 2 big candles. Okay, then it tries to go, it gets sold into. Tries to go, get sold into. But then look where it stops over here. And like, what do we call that? Well, that's a head and shoulders. That's what you don't see on the 30-minute or even the 15-minute. This is a reversal pattern no matter what time frame you're on. Now, granted, the higher time frames are a lot stronger and a lot more accurate that it'll work out, but it's human psychology. It's still a reversal pattern no matter where it is. Okay. And then you see, obviously, Morningstar Doji, obviously very strong. You see a bunch of signs of strength, even though it's only the 1 minute. The price is going to go where it's going to go, and it's going to show up somewhere. Okay, it's not.
And where
it's
exactly?
Not just gonna,
where
like,
exactly
all
did you get in this one for the trade that's stuck?
Right here. Right here.
That was your entry. What candle? Can you pinpoint exactly the line and the candle?
Yeah. Let me. I'll draw a new. Right, these 2 candle formation right here. You might say, well, okay, let me draw that a little better. Well, you know which candle it is, but I'm gonna get rid of the drawing. You might say, well, what the heck about that looks bullish? And a lot of times I'm just playing wrong. So I'll start with that. But you see how the candles are big flush. So when you have a big flush that all of a sudden stalls out, and then you get smaller candles, you might as well equate these smaller candles to something like this, a morning doji, because it's the Morningstar. It's the same premise. The momentum is shifting. Basically, it's basically like a doji. And then you get, so when this 1 minute candle plays out, the one with the wick down here, it wicks down. So what you see on the live is you see a bearish candle forming, and so you think it's about to go down. But when it stops there, it's going down and it stops, and then it wicks up and goes there, and then you have a momentum candle with no wicks straight up off that. To me, that's the kind of stuff I'm looking for. And so cool. I got in there, one position, then I added a position on the right shoulder below here. And yeah, so that's what I'm looking for.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Brilliant. Hey, look, guys, we're going to wrap it up there. Thank you very much. This was a great little breakdown of how you get into these trades that helped you win the Trading Nut Funded Cup and get that $100,000 City Traders Imperium funded account. I know you're making the most of it at the moment. Now, we did ask you if you wanted to share your details. You didn't. You gave some details, didn't you, in the previous one? Do you want to share them again?
Yeah.
Or you're not?
I mean,
go on.
Yeah, I don't go on these platforms to post anything, but you can reach out to me, send me a message if you want. It's SD as in David. Then my last name, Young, Y-O-U-N-G, and then the number 222. So SD Young 222 on Instagram, Twitter, and then Biblical Christian Steve on YouTube. But I don't have any videos, but maybe one day.
Cool. Guys, well, look, what we're going to do is we're going to hook up those links in the show notes below. Do remember, hit subscribe, hit like, click on the notifications bell, and click all to make sure you get notified when future videos like this go live. Thank you for watching, and we'll see you in the next one.